Do you still need life insurance, or are you self-insured? How would you find out? I'm going to help coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. All right, if you need life insurance and you have life insurance, then I would say you're insured. Of course, right? Obvious. Okay. If you need life insurance, but you don't have life insurance, or you don't have enough, the right amount of life insurance, then I would say you're underinsured. But if you've been saving financially, you've been doing a lot of hard work, sacrificing all that sort of stuff, and you've reached a certain threshold where you don't need life insurance, then you're self-insured, right? That's fairly obvious. And given the choice, I would say, gosh, let's get everyone to be self-insured. Why? Because then you don't have to pay someone else. There's no risk to transfer. You've paid yourself first, and therefore you don't need to pay an insurance company transferring that risk because you've built up your own financial situation. You don't need that insurance. You're self-insured. So how would you know? If we're all aspiring to get there, how would you know? Well, obviously your own health and situation plays into that a little bit, but financially, you have life insurance to fund unfunded goals. To fund unfunded goals. You have a goal of being debt-free. And so if you pass away and you still have debt, then you don't have the income to be paying off that debt. It would be, to fund that goal, you'd have to have some life insurance to pay off that debt. Okay, that makes sense. If you have a goal of having a certain lifestyle, maintaining a certain lifestyle for you and your family, and you pass away and you don't have the earnings coming in anymore to be able to continue to afford that lifestyle for your family, those you leave behind, maybe life insurance is there to help with that goal. Help kids with college, same thing. Help yourself with retirement, your spouse that you might leave behind with retirement, same thing. It's to fund unfunded goals. That's why, to me, determining if you're self-insured and how close you are to that can only come from a process called a life insurance needs analysis. A life insurance needs analysis. Now, some investment professionals, I would even call them insurance salesmen. There's even one very, very well-known financial spokesperson on the radio and some on YouTube and wherever else that uses a wrong approach, in my opinion, in our opinion, and that is that to determine whether you need insurance or not, you don't do a needs analysis. You just look at how much income you have, and the solution is a multiple of that income. It's completely bogus. Completely bogus, and I can't say that strongly enough. That does not make any sense to me, because that would say that later in your career you're likely earning the most you've ever earned, but later in your career you probably have the most you've saved up ever for retirement, the least amount of debt you've ever had, or maybe you're debt-free. The kids are probably as self-sufficient as they've ever been, and hopefully they're grown, they're young adults, and they're not they don't even need college anymore, and they don't need financial support from you. So why at that time, when your income's the highest and you've built up so much financial freedom, why would you need the most amount of life insurance? It does not make any sense. A multiple of income approach makes no sense. The way to determine if you're self-insured is to do a life insurance needs analysis. That life insurance needs analysis is where you're looking at, and it can be emotionally hard, which is why you need a CFP helping to guide you through this process. Certainly a CFP that's doing comprehensive financial planning and not just trying to talk you into buying a certain amount of life insurance. They're going to do this needs analysis where they're going to look at really similar to those 5 factors for your retirement plan, but instead of age being, well, when do you want to retire? Instead of saying, well, when do you want to die? Assuming, well, what if you pass away today? Or what if your spouse passes away today? What would it look like? What's your spending look like? What's your income look like? What are those long-term goals that you've saved up for, the retirement, paying off debt, that sort of thing? And it basically, you're going to run a scenario that looks at if you pass away today, which goals are unfunded that still need to be funded. And how much life insurance do you need to fund those unfunded goals? Okay? And then you can work that scenario with your CFP to say, okay, well, what if I don't pass away today? What if it's in 5 years? What if it's in 10 years? Basically, when am I on track to be self-insured? This life insurance needs analysis approach does several things. And the first thing is it helps determine how much life insurance you need. Ideally, and as is the focus of this video, it would reveal you don't need life insurance. You are self-insured. Ideally, financially, we're all getting to that point, and hopefully you sit down, you do this needs analysis approach with your CFP, and they say, no, you don't need life insurance. You are self-insured. That's fantastic. Now that you're self-insured, is there any other reason to have life insurance? Most often there isn't once you're self-insured, but there might be. I was meeting with an individual recently who is fully self-insured, but said, if I pass away, there is still this financial goal that we'd like to, we want to pay the house off. We've got just a little bit left on the house. Yeah, we can sell all their investments to pay that mortgage off if something happens to one of us, but I don't want to put us in that situation where we have to sell investments, potentially come up with some tax consequences if I pass away or my spouse passes away. Let's have life insurance to just pay that debt off. Okay, fantastic, fantastic. But so you determine how much you need, and ideally that would show you that you're self-insured. If you're not yet self-insured, it also would reveal what type of life insurance you need. Hopefully you're working towards becoming self-insured, and you would need a temporary policy, a temporary life insurance policy, which is known as term insurance, term life insurance, and you would know how long you need that for. And then above all else, this process, a life insurance needs analysis, would move the life insurance discussion from a sales discussion, someone trying to talk you into something, to a planning discussion. And that is proactively, what should we be doing to manage this risk? How can we pay the least amount of money possible for the right level of insurance so that we have every other dollar going to help us achieve those financial goals, as opposed to paying an insurance company to protect us just in case those goals are left unfunded when we pass away. That's the job of your CFP. Doing this life insurance needs analysis, that's their job, that's their role. I disagree strongly with a multiple of income. To me, that's a quick and dirty way of coming up with a number that you can agree on. That's not really helpful to me. I'd rather take a planful approach, life insurance needs analysis. Are you self-insured? Have you done any life insurance needs analysis? Do you know how much coverage you actually need, the type you need, how long you need it? If not, work with your CFP. And if you don't have a CFP on your team, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with a K. WiseMoneyShow.com. You can find us there as well, or send us an email, info@Korhorn.com. All right, there you have it. Go out and take your next wise step in your financial life.